Hello and welcome to the FT's live business clinic with me, Claer Barrett. I'm the FT's personal finance editor, and I will be joined today again by Dan Thomas, our executive news editor at the FT, who's been keeping well in front of all of our news coverage about how businesses, small businesses in particular, and the self-employed are coping with the coronavirus crisis. Now, today we're going to talk about the UK government's plans to extend both the furlough scheme and the support that's being offered for the self-employed, with the caveat that although it will carry on for much longer, this level of support that the state will provide will gradually be eased back. So with more than 10 million workers now receiving some kind of state subsidy, that's 8 million salaried workers and just over 2 million self-employed people, we are going to explore how both of those schemes are going to be extended and how the level of state support will gradually drop. So today, we want to hear from you about the adjustments that are going to be made to the scheme and as the UK government plans to get businesses back to work. And if you're running a business, how this will affect your company. Are you ready to bring employees back? How will the new furlough rules affect your ability to retain staff? Are you planning on having to make redundancies? How much would your trading need to recover from current levels in order to meet the level of contributions that the government has set out? And what do you think about the government's plans for a job creation scheme? Well, there are lots of ways that you can ask us a question. If you're watching this in ft.com, just comment at the bottom of the story below, and all of your questions will magically get relayed to me on my iPad. If you are watching us in YouTube, then you can comment in the YouTube live stream. And if you're watching us on LinkedIn, then you can go into the LinkedIn comments and we'll get all of those picked up that way. So let me just start then with some questions for you, Dan. How are you this morning?
I'm very well, Claire. Thank you for having me.
Well, we're very glad to have you back. Now, can you tell us, to start off with, a little bit about what Rishi Sunak, the UK Chancellor, announced last week and how this sliding scale of support for businesses is going to be eased back?
Yeah, so there was, plenty to be happy about as an employer from the Chancellor's extension to furloughing last week. As you say, even if there will be worries that his generosity will mean more costs for the taxpayer ultimately down the line. Actually, this morning, the Treasury confirmed that now 8.7 million jobs have been furloughed at a total cost of £17.5 billion. They're huge sums, huge job numbers, and really emphasises that this is the real plank to the government's bailout scheme for the economy at the moment. And when it gets taken away, and it will get taken away, as the Chancellor confirmed last week, at the end of October, there's a major question about what happens then to all these jobs. And what he's done is he's brought in a great degree of flexibility in order to wean companies away from this from the good stuff here, which he's putting out. The good news is that this more flexible furlough has been brought in earlier than expected. The bad news is that they'll have to pay wages of their workers either way from August on a sliding scale, as you say. And this will really start to focus minds about whether there are jobs to come back to for the many, many people now on furlough, and it becomes the moment of truth for UK employers. But first, the good news: from July the 1st, businesses under the government's furlough scheme will be able to bring back their furloughed employees part-time. Even if they don't, the government will continue to pay 80% of staff salaries due during the June-July months. This has been moved forward from the original start date of the 1st of August. It's kind of interesting how it's going to play out. The full details haven't been published yet. They're expected in a week or so's time, but it's probable that what effectively will happen is the employer has to pay for the part-time hours. These come off the furloughed hours, so effectively the government will pay 80% of the hours not worked, with the employer picking up the rest of the time, the worked time. Like I say, the full details haven't been announced yet. We're not expecting any particular limit to the part-time return. So, employees can do 1 hour, they can do 20 hours. It's designed to be flexible, we think. And this can be altered decreased relatively flexibly over the weeks as well. So if employers want to bring their staff back gradually, 5 hours, first week, 10 hours, and get back to business, that's very much in the purview of the scheme. The scheme will be closed to new entrants as of 10th of June. So there's only actually, 8 or 9 or more days before workers have the chance to access the scheme. So if the employer hasn't furloughed the worker by then, they won't be able to access it. As far as we are aware, there's no change in eligibility criteria, and to be fair, it was never that strict anyway. So, again, a really open scheme available for many, many workers out there.
Now, when it comes to the level of cash that the employers will have to put in as the scheme is lengthened. So at the moment, the government's providing 80% of pay, but soon employers will be asked to put in things like employers' national insurance contributions, and then take over the paying of pensions if their staff are eligible for the minimum pensions contribution. And then after that, that 80% will gradually sink lower.
Exactly. When we were reporting the story ahead of the announcement, many people thought the Chancellor would bring a relatively sort of blunt tiered system, so going from the 80% of salary covered down to 60% maybe over the first month or so. Actually, he was much cleverer than that. So for August, employers will have to pay for the national insurance and pension contributions, with the state picking up the rest of the 80%. So that works out at 4 or 5% actually. So it's not a huge cost to them initially. Then you go into September, where the government will pay 70% of the salary, roughly £2,100, let's say. Employers then having to pick up the extra 10%, taking it to that £2,500 maximum, plus the national insurance and pension contributions on top of that, which, like I say, is 4 or 5%. And then in October again, the sliding scales down to 60% of salaries covered by the state, with employers then taking the 20% up to the maximum of 2,500 again. And then it ends, and employers really have to sort of focus their minds about whether or not they want those jobs to be maintained. Although I think in reality, what will happen is, as soon as they see some costs coming in August, many companies will start making those decisions.
Well, very well explained, Dan. Thank you for that. Now, just finally, before we go over to questions, as questions are coming in, don't forget you can ask me or Dan any kind of question that you like on the bottom of the article or on the chat stream in YouTube or in LinkedIn. And we'll pick up all of your questions via my husband's iPad, which I have stolen from him permanently. Let's just talk briefly about the extension to the self-employed scheme, because I wasn't expecting them to do that on Friday. I was pleasantly surprised that they did. It will carry on for those who are able to claim it, albeit at a reduced level of support going forwards.
Exactly right. Yeah, the scheme was extended. I think many people were pretty happy with that. It's not quite as generous as the furlough scheme, and that has attracted a little bit of criticism. Effectively, as a second and final grant, capped at around £6,500, which is available for people now, which is great. I mean, it's better than nothing. But I think there has been a sense, well, potentially there could be a little bit more generosity, and it's only extended into August, so it hasn't got quite the same sort of length of benefit that the furlough scheme has.
And again, self-employed people will have to wait 3 months until August and then claim retrospectively for that grant. It won't be paid month per month. So let's start off with some
average monthly trading costs, I think.
Absolutely. Let's start off with some reader questions. So FT reader Dolphin23 says, I have a business in the tourism sector and another in the conference sector. So double whammy for Dolphin. Definite timelines with definite types of restrictions that will need to be in place for these sectors need to be given soon, because without a definite date when indoor businesses can open, it's very hard for us to plan how our business can survive and therefore wean the staff off furlough. I mean, we have another similar comment here from FT reader EIW, who says, we are a manufacturing business in the UK, beginning to experience small glimmers of hope that things are picking up. Well, that's good to hear. But bringing forwards furlough flexibility is very welcome, but I wonder if July isn't too late. On a 1 month tight cash flow horizon with no flexibility for part-time employment, but not enough work or confidence to bring back our mostly full-time workers, will surely be damaging for productivity as a whole. Well, 2 responses quickly there, Dan, from readers. What do you think to those?
Well, on the first, I feel for the person, because hospitality is right at the right to the centre of so many problems right now. You know, their revenues have totally dried up, and they're approaching the months where they should be making hay. So it does feel, particularly in the tourist business, you know, you must be really struggling and really hoping that you can open up as soon as possible. The government hasn't suggested that they will be able to open any time earlier than the beginning of July. At the moment, we've got non-essential retail opening up in mid-June, and then comes hospitality and tourism after that. So really, they're going to have to hold in there until that happens. And bear in mind that even when they do get to open, it's going to be on a much restricted basis. You know, we're talking about 2 meter social distancing within bars, restaurants, nightclubs, and that goes from everything from a burger van to the fat duck. So, you know, this is a broad brush approach to hospitality, which will really change the dynamics of that business. So, I mean, for them, you know, they're going to have to make a decision about how many people they can even put in their kitchen. So, furloughing really works for those businesses, because what you'll find is they can only fit maybe 2 people in a kitchen serving out food before they're breaching social distancing rules anyway. So they might want to keep a greater number of people on furlough than before. Conferencing, you know, as we know from our own experience, is also having a bad time with things at the moment, and it's not expected to come back anytime soon. So yeah, it really feels that the government is doing its best to try and return those sort of businesses. They know how important tourism is to this country, but ultimately it's also a massive draw for big crowds, and they have to be careful with those sort of numbers. On the manufacturing point, I mean, the government has brought the flexible furlough from the beginning of August, when we thought was going to happen, to the beginning of July. So, and bearing in mind this is a complicated system, so you know, it's not exactly something they can switch on and switch off quite as easily as perhaps people think. So I think they're doing their best to bring it in as quickly as possible. We haven't actually seen the final details yet of how it even looks and how employers are going to be able to access it. So I think they're going to have to hold in there again. It's only 3 weeks away.
And I should mention on the point about doing events digitally, the FT is doing a whole series of free events for readers. If you follow the hashtag FT Digital Dialogues, try and pronounce it properly, on social media, LinkedIn, Twitter, whatever, you'll be able to find details of those. So a bit of a technical question now from FT Reader Industrial 21. Noting that the full details of how the furlough scheme will work in practice have not been published, they want to know, will employees who've been furloughed before but have now come back to work have to be furloughed again by the 10th of June to be eligible from the part-time furlough from July onwards? And this particular reader is a manufacturer and exporter who interestingly says they've agreed a rota with their staff to share out the periods where staff are on furlough, which I have to say is something that I'm hearing about a lot from different groups of workers. People kind of like want to have their turn on furlough and come back, which is presenting quite a lot of operational issues, doing handovers. But Industrial 21, we have looked at the rules so far that the Treasury have put out, and I have to say it's not super clear, but it does appear to indicate that if a staff member has been furloughed before, they can come back part-time. The exact wording says, claims from July onwards will be restricted to employers currently using the scheme and previously furloughed employees, although it doesn't detail exactly when they would have had to been furloughed. So we'll definitely pick up on that when we get the full rules out. When are you expecting the full rules to come out, Dan? Presumably before the 10th of June.
Well, we think it's next week, basically, yeah. So the start of next week, we hope to see some sort of guidance about what exactly the employers will need to do and how they're going to access the scheme. But I think, you know, most of the details are out there in the broad brush sense. So I think there won't be any massive surprises. This is the technicalities.
Okay, so we've got lots of questions coming in now from LinkedIn. Good to see you on LinkedIn. Please keep them coming. Before we jump to those, another one from FT Reader Colite, who says, individuals who became self-employed in 2018-19 for the first time are denied eligibility both to the self-employed support scheme and the furlough scheme if their self-employed income is less than 50% of their total income. Why, now things are being extended, won't HMRC allow the 2019 to 20 tax returns to be used when deciding eligibility? Well, Dan, it's a fair question because people have done their accounts by now, but I sadly think it's unlikely to happen for the next 3-month period. But this is a really big gap, with 5 million self-employed workers and only 2.3 million who are claiming this grant. It does show you there are lots of areas where people are falling through the cracks.
No, you're right, Claire. It's a huge gap, but the Treasury has shows no sign of trying to fill it really, and the intention really from now on is to ease back and to stop spending so much money. Having put out, as we say, almost £20 billion on the furlough scheme alone, it's something that they're trying as much as possible just to sort of switch the gas off as much as they can do. So I don't think they're going to make any new grants to the workers, which are, as you say, have been disadvantaged by the scheme so far.
And also, many people who've joined in our video discussions before, owner-directors of small limited companies who have been campaigning vociferously to be recognised, but sadly no good news for them in Friday's announcement either. Now, we also have a question coming in here about Bounceback Loans. This reader, who's called South of the River, says, I have a question on Bounceback Loans. I have 2 businesses. They own one business 100% and have a 50% stake in the second. Would I be eligible to apply for a Bounceback loan for both businesses? The only information I have from my bank suggests that 2 companies within a group both cannot have a Bounceback loan or a coronavirus business interruption loan, also known as a CBIL, if one has a controlling stake in the other. Well, Dan, it sounds very much like this person could apply for the 2 Bounceback loans, joining the millions and millions of small businesses who've already done so.
I think that's right. I think technically, as long as the companies are entirely separate and there's no ownership structure which connects them, I think technically they probably will be able to. Yeah, I mean and this has come up as an issue when talking to some officials who worry that this is something which could be arguably exploited. If you have, let's say, 7 or 8 different companies, perhaps you can raise money from your banks through each and every one of them, and perhaps that's not really what the scheme is there to do. If these are if these are owned by one person, so there is questions whether or not there's a sort of moral. Does the person need to get money from both companies? But yeah, I think that technically, that should be fine. Ultimately, it's up to the banks to decide, though. I think the Bounceback loans are designed very deliberately to be quite light touch, so there aren't too many questions being asked at the point of delivery. But saying that banks are very cautious that there is the possibility of fraud. Not saying this person has any fraud whatsoever. He or she's obviously asking the question because she wants to know. But it's but there are people out there who will try to exploit the fact that these are light touch rules to perhaps get more money than they should.
And another question coming in from LinkedIn, from Mohammed Ali. He says, I've started my own company in 2019. Is it worth claiming? Well, I'm assuming you're asking us, Mohammed, is it worth claiming the Bounceback loan? You don't mention whether you're talking about claiming a furlough for staff payments. I mean, even if a company was set up in 2019, it would be eligible to apply for one of these loans, as you've been writing about this week. That's one of the reasons why so many people have been.
3.5 million people who have already done so. It's there is it's just incredible how much money has been put out there through this scheme. It's just gone through the roof. Banks are overwhelmed by demand for these loans. I mean, the question he should be asking himself is not whether or not I should get the loan, as so much as can he repay the loan. So I mean, and I think this is something that banks are very careful to be clear on, and the government's trying to be clear on as well. These are loans, so that ultimately they will have to be repaid. So to the question, should I get one? Absolutely, if you need one, but do get one if you can repay it as well, because you don't want to lose your business down the line.
Absolutely. Now, I'm going to mention a very good comment that's coming from Jenny G on LinkedIn. Now, I'm sure me and Dan will have some ideas about this, but it's possible that you people watching at home will want to chip in with their own responses. But Jenny G asks, which employment law issues do you think will arise from the furlough scheme, and also the level of redundancies that are likely to be made afterwards. Well, love to hear what our readers think. I mean, as a first kind of response to your comment, Jenny G, I'm already aware, because people have been contacting me on social media, that the forms that they're made to sign accepting the furlough often have other clauses kind of shoved in by slightly unscrupulous employers, saying, this is going to change your contract with us, change other aspects of your contract, and they've been very reluctant to sign. They've been happy to be furloughed, but they've been very worried about other changes that some employers have been trying to sort of like shove through at the same time, which could make them more vulnerable to redundancy afterwards. But I mean, clearly, Dan, lots of people watching are going to be worried about redundancy themselves, or worried about getting the rules right if they are an employer and unfortunately have to lay people off.
Yeah, and remember, certainly for any collective redundancy process, there needs to be a 45-day period. So if you think about it, if August the 1st is when employers will have to start to think about paying some money towards the furlough scheme, then we're talking mid-June, actually not that far away, before people have to start thinking about collective redundancy proceedings around staff which they don't think they can keep on beyond the summer. And it's not entirely clear; it's a slight grey area, but it's pretty sure that people can be redundant now on furlough.
And a kind of a linked question from Tom Hartwright on LinkedIn. Again, if you've got a response that you'd like to chip in, do mention it. He says, given the generosity of the furlough scheme, up to 80% of pay, and the likely number of redundancies ahead, do either of you expect the government will increase unemployment payments? Now, this is a really interesting debate at the moment. Lots of people have been talking about a universal basic income, those kind of ideas. Certainly Mary Somerset Webb was writing in the Weekend FT about that, if you didn't see her column. And the level of support that people can claim, if indeed they can claim anything at all on universal credit, certainly it was a big shock to many people at the beginning of the pandemic spreading. We did lots of articles at that time where people were saying, I thought I'd be able to claim benefits and I can't because my partner earns too much, or I've got too much in savings. It's certainly been a shock to the millions of people who are now in the benefit system. What's your feeling, Dan, about how support will have to change in the future?
Well, I think, I don't think the Treasury, from what I understand, I don't think the Treasury wants to increase the level of benefits to encourage people to not work. I think it's quite the opposite. I think their philosophy is very much about getting Britain back to work, getting the economy cranked up again in any way they can do. So we think that Rishi Sunak is going to be doing some sort of mini budget in July time, and that'll be focused a lot around how to do this, how to get companies back to being productive, how to get workers back, how to get them back in the right jobs as well. So it's not just about maybe going back to the jobs they were doing before, but the jobs that will be for the future, the jobs that will be producing the UK's economic growth between now and 2030. So there'll be, what some of the ideas being thrown around that people are talking around is not so much increasing universal credit, but perhaps giving holidays around national insurance or some of the other costs at the employment level, which maybe will encourage companies to keep jobs, to bring back workers, because they know they've got that holiday, particularly for new roles as well. So those ideas have sort of been knocked around, and we don't know exactly where it's going to land yet. But we're pretty sure that the mini budget's going to be focused entirely on, this idea about bringing the economy back online post coronavirus, not so much about just supporting people on universal credit.
Yes, absolutely, and I think your comments about reshaping the economy, and certainly there's talk of this job creation programme, which was the big FT story over the weekend, is definitely where they are putting the emphasis. So we have a property-related question now, which I'm sure will please you, your property reporting past. Adam Kosalski on LinkedIn says he questions the impact on online company activities. All the online companies, of course, have been booming during the lockdown, and says, where is the support for traditional bricks and mortar businesses, and what would the impact be on this sector and the likely downsizing as retailers shared shops and perhaps offices where people like us are working from home, as you can clearly see on this video, don't quite need so much office space going forwards.
No, absolutely true. I mean, to the first point of his question, it's, there are clearly grants out there for retailers up to a certain rateable level. So there is bricks and mortar grants which people can get access to. At a smaller level, it has to be said, those aren't necessarily available for some people. I think the coronavirus is going to spark a huge upheaval in how people approach property. I don't know about you, Claire, but I do much more shopping online. My impulse Amazon purchasing has gone through the roof. Every day, people knock on the door every couple of hours with some random thing I'm buying, because just to keep the hours filled, really. But so it's going to change so much on that front. And I remember when we go back to shopping as well, there's going to be huge queues outside. It's not going to be back to business, mid-June. I think your people will be deterred by the fact that they'll have to queue, there'll be social distancing. If you touch a pair of shoes in a shoe shop, they'll have to go back into the store cupboard to get cleaned effectively. So all those things will prevent the high street from getting back to normal for many, many months yet. And I think the same is true for office space as well. People won't be going back to the offices. Certainly many companies don't expect any sort of large-scale return until September at the very earliest. And even then, I think people will be changing how they work. As you say, we're all working very happily from home now, aren't we? So, we can see a lot more of that going forward.
And one ray of sunshine, if you like, so we don't depress people too much. I've been really impressed by the way that local independent retailers have reacted and adapted to the changes in the market. They've obviously got a lot of customer loyalty, people who live close enough to walk to their shops, and they are using, such huge amounts of innovation in terms of coming up with online ordering systems, collecting policies so that people don't have to queue for long times. And the sort of innovation I'm seeing in my own local area, I'm finding very encouraging. And of course, we want to support independents more so than the big internet giants like Amazon. Now, we have some other comments about the part-time furloughing, exactly the same question as we had earlier on from Amita on LinkedIn. She says, can you return employees from furlough as of the 15th of June and then put them back on part-time furlough as of the 1st of July? I think we're going to look into this properly for you, Amita, because a couple of readers have asked that exact question. And it's not clear in the current guidance. It looks like you can do it, but we'll get the full rules on that next week. And I'm sure there'll be a juicy FT Q&A piece explaining it when that happens. Jenny G, who was asking us about the changes to employment law and likely problems that could arise when people start to make redundancies, has come back and she says she thinks that the details of the furlough scheme as an employer are very ambiguous. For example, little is said on whether notice pay should be paid from the furlough scheme or from the employer's coffers. Which parts of the scheme require clarification, and where can employers and employees seek advice on such ambiguities, she says? Well, as I mentioned, we will report more fully when the Treasury releases those fuller rules next week. And at the moment, your primary source of information, as ever, is the gov.uk pages, where all of the information on these different benefits and schemes are laid out. Final question here from Mohammed. He was very pleased with your answer, Dan, about the Bounceback loan. And he says, do we have any idea about the interest rate? Well, yes, we do, because it's the same for everybody.
It is. It's designed to be as cheap and easy as possible. So yeah, 0 for the first 12 months and then 2.5% from then on. And it's up to a 6-year term. So, really low interest rate. If you think about that, that's incredible for 2.5% on a big loan like that, and nothing for the first year.
No, nothing at all. No repayments, no interest. Government covers that, and I think the limit is 25% of your business turnover. What you can borrow, or £50,000, whichever is the greater. Well, thank you very much, Dan, for joining me today on the Business Clinic, and thank you very much to all of our readers who have commented and asked us questions online. You'll be able to access this video on the FT's YouTube channel and also on our LinkedIn page. We will be back next Tuesday at the same time, 12 noon UK time, tackling a different topic. I will go back into the comments field later and have a look if you've got suggestions of what you'd like us to talk about or issues that we haven't picked up today that you'd like us to come back to. We'd love to hear from you. In the meantime, this is Claer Barrett and Dan Thomas signing out. We'll see you next week. Thanks very much.